Well, as promised, we'll get chatting about the earnings that are expected today, and the big one is Tata Motors from the auto space. Sonia Shenoy, as always, joins us with the key expectations. Sonia, good morning. Tell us, what are we expecting from Tata Motors this time?
Hi, good morning. Thanks for that. Well, the stock is up almost 15% from the lows in the month of October. That's because the Jaguar-LandRover performance on a quarter-on-quarter basis has seen an improvement, and that will showcase in the consolidated numbers this time around. So I'm expecting a revenue growth of around 16% on a consolidated basis at 78,000 crores. The margins will improve to 10.9% versus 8.1%. The most important numbers to look out for are the JLR numbers. On Jaguar-LandRover itself, it's been an 11% sequential recovery that we've seen in the numbers between last quarter and now in terms of the volumes. Volumes in China as well have recovered quarter on quarter, and that's something that perhaps the street has factored in. In terms of earnings, revenue growth of almost 1.5% year on year is what we're looking at. Quarter on quarter will be a better performance. Now, on the margin front, 11.6% is the margin that we are working with right now. This compares to about 10% that we saw last time around and same time last year, but it compares to 9.1% last quarter and 6.2% the quarter before. So if they do 11.5% margins as we are expecting, it will be the third straight quarter for sequential improvement in margins, and I think that is something that the street will definitely like. On the bottom line number, remember, it's been 2 consecutive quarters of losses for Jaguar-LandRover, and this will be the first time after 2 quarters that they will see a profit. So JLR looks like it's improving, at least sequentially. The problem is in the standalone business. Although standalone business forms, less than 10% of the overall EBITDA, but still this time around, medium and heavy commercial vehicle volumes have fallen 14%. Overall CV sales are down by about 6%, and that will impact the standalone numbers this time. So weak standalone performance, but JLR will see an improvement sequentially, and I think that's what the street is going to be looking out for.
Okay, Sonia, thank you so much for that. So weak standalone performance, but Jaguar-LandRover is the business to watch out for this quarter. But from auto space, let's move on to the FMCG space, and Britannia will also be reporting its numbers. Mangab, so far FMCG has reported in line or better than expected numbers largely. What are we expecting from Britannia today?
Let's see whether Britannia has a good day, or is it pure magic, or maybe it's a soggy biscuit that it serves. Because if you take a look at the stock price, over the last 2 years, it has more than doubled, and it's not a dinky toy stock. It's trading at around 51 times FY20 earnings, very close to its record high. And if reports and calculations are to be believed, perhaps could be the next inclusion in the Nifty as well. So a lot of expectations from Britannia. Revenue growth seen at 12%. This compares with an EBITDA growth of about 16%. So we'll watch out for that. 12% would mean around 2875, comparing with 2567 crores in terms of the top line. EBITDA growth of 16%, that would mean a margin expansion of close to around 50 basis points. 16.1% is what the street is working with. This compares with around 15.5%. And as a result of that EBITDA expansion, net profit likely to grow by about 16.5% as well. The street is working with a number of 307 crores. For Britannia, the volume growth will be most important. Domestic volume growth seen at 10%, and it will be on a base of 13%. Remember, Hindustan Unilever posted a double-digit volume growth on a double-digit base. So let's see whether Britannia does that or not. A lot of people are expecting that. So that red arrow should actually be a green arrow. It's a 10% growth which is expected on a heavy base of 13%. Remember, the last 4 quarters, the company has posted double-digit volume growth. So what leads to the additional revenue growth? A price hike of close to around 1 to 2%. Some inflation is expected in input costs. So that is something we'll watch out for in terms of management commentary. But by and large, benign inflation has kept most of its input costs lower. And we'll have to watch out for the 4th quarter. That is most important as input costs increase.